I was going through one of the research reports that mentioned that India's jewelry retail sector has surged from $50 billion in 2018 to $80 billion in 2024. In rupee terms, that's a massive 6.7 lakh crore market as of 24 and is expected to reach $145 billion by FY28. Interestingly, the contribution of organized market in Indian jewelry retail in 2001 was around 10-15%. That got increased to 33 to 38% by 22 and is expected to increase to 42 to 47% by FY26. Even CRISIL has published a report that mentioned that by FY27-28, the contribution of organized retail market is going to increase to around 50%. And CRISIL has projected 22 to 25% growth for the organized retail sector in FY24 to 25. Hey everyone, my name is Sahil and this is my Personal Finance Academy. From ancient civilization to modern times, gold has held a special place in the hearts of Indians. Not just as a precious metal, but as a symbol of wealth, status and tradition. Over the years, gold jewelry has become an integral part of Indian weddings, festivals and religious ceremonies. Gold is considered auspicious and is often passed down from generation to generation. Today, India is the second largest gold jewelry market in the world after China, with 562 tons of gold jewelry consumption in calendar year 2023. That's where in today's video, I've done a detailed analysis on India's gold retail sector. I've divided this video in three parts. We'll first understand the key growth drivers for the sector. Then second, we'll look at the key listed players in this space. And third, we'll do a comparative analysis of all top players to figure out the best investment opportunity in the gold retail sector. Alright, let's get started. Let's first discuss what factors are driving the growth of gold jewelry sector of India. So first of all, the big growth driver is cultural significance. Gifting gold is considered auspicious in India, and gold gifts are an integral part of all ceremonies, be it your weddings, birthdays or festivals. Not only that, every year tons of gold ornaments are donated by devotees in temples of India. Then another key drivers for demand of gold is its inherent value. Gold as an asset class appreciates over time. Plus it can be liquidated anytime in case of emergency. And since gold is an internationally accepted currency, it acts as a hedge against inflation and unstable geopolitical environment. So gold jewelry is passed on from generation to generation. Plus gold is also a status symbol where Indians love wearing gold jewelries. Now there have been small mom and pop gold retail stores in India for centuries. However, over the last few decades, there's a clear trend of shift in market from unorganized to organized gold retail players. Some common factors include your trust and quality assurance, where organized players provide BIS hallmark certified gold. This transparency in quality and price build consumer trust. Plus, customers are preferring established brand because of their reputation. This ensures that in case of resale, customer can get good resale and exchange value. Second driver is organized gold retail offer a wide range of design as per your consumer preference. Third factor is organized players have a solid marketing team versus top celebrities that result in top of the mind recall. Plus they offer various campaigns like gold saving plan, option to buy on EMI and so on. That also attracts a lot of customer. Then next factor is organized players provide much better consumer experience in terms of well-designed showrooms, exchange policies, loyalty program and so on. Apart from this, one factor that has boosted the growth of organized player in Indian gold retail sector is government regulation. Before government implemented GST, unorganized players used to provide informal sales invoice, that is your kacha bill, and underreport their sales to avoid taxation. And a part of this benefit they would pass on to the customer. But after GST, even unorganized players that have a certain turnover have to offer proper invoice and pay GST. So that price gap advantage that unorganized players earlier had over organized player has vanished. On top of this, organized players are opening up their retail stores at a fast rate to capture the market in tier 2 and 3 cities of India. So all these factors have resulted in sharp growth of organized gold retail players over unorganized players in India. Now let us look at the top listed players in the Indian gold retail sector. Okay, before we proceed with stock names, I would highly recommend focusing on your skill development in 2025. I believe that now it's no longer just about degrees or traditional learning. It's about mastering the tools and technologies of tomorrow. And one technology that is transforming the world is artificial intelligence. While AI is certainly taking away jobs across the world, it is also creating fantastic opportunities for those who know how to use it. So I recommend you this AI training program by Growth School, which is our partner in today's video. Usually it is paid training, but on the occasion of New Year, it is made free for the first 1,000 people. I'll provide the details in the pinned comment. Through this training, you will go through how to use AI to sort complex data in seconds on Excel, then how to frame business strategy, build a personal brand using AI, learn how to find and get jobs easily using AI, salary hike strategy, and so on. It also includes more than 25 AI tools. The best part is this training is for everyone, whether you are in marketing, sales, freelancing, or tech field. So this is your New Year opportunity to stay ahead in 2025. But it's free for only 1,000 people. So register now through the link in the description. Moving on, the first stock in the list is Titan. Titan owns 4 brands in gold retail sector of India. Its flagship brand is Tanishq that caters to the premium segment. And now Titan has expanded its gold retail portfolio to mid-market segment with brands like Mia and CaratLane. And the luxury segment includes Zoya. This slide shows the massive network of Titan with Tanishq having 486 domestic and 16 international stores across 290 towns. Mia with 207 domestic stores, Zoya with 12 stores, and CaratLane with 286 stores. Please note that Titan has presence in various other categories like watches, eyewear, and so on. But jewelry segment contributes nearly 85 to 90% in company's revenue. In FY24, its jewelry segment had the revenue of 38,350 crore and a bit of 4,726 crore. Titan has been a massive wealth creator for the investor in last many years. Although in last 1 year, its stock price has been consolidating. Currently, Titan commands a market cap of around 3 lakh crore. Then second stock in the list is Kalyan Jeweler. Again, one of the largest gold retail chains in India. Company is thriving with more than 100 years of legacy, where first generation started textile business, second generation expanded it, third generation established a jewelry business in the 90s, and fourth generation is expanding it. Today, Kalyan has 267 showrooms in India and 36 showrooms in the Middle East. This slide shows the pan-India presence of Kalyan Jewellers with even distribution across the country. Company enjoys around 7% market share in the organized jewelry market of India. Kalyan Jewellers had it listing in March 21, but stock did not move for next 18 months. But since then, its stock price has skyrocketed around 10 times. Kalyan Jeweller has a market cap of around 80,000 crore. Then third stock is Senco Gold. Incorporated in 1994, Senco Gold is a pan-India jewelry retailer and is the largest organized jewelry retail player in the eastern region of the country. Today it operates 166 showrooms that include 99 company-owned showrooms and remaining franchised. Senco Gold is also run by fourth generation of the family. Company had its IPO in July 23 at levels of around 317 and stock touched peak of 1544. That was around 5 times growth in just 15 months. However, the stock is down around 25% from the peak to current levels of around 1150. Senco has a market cap of around 9,400 crore. Fourth stock in the list is Gadgil. It recently got listed a few months ago in September 24 at levels of around 480 and share got listed at 73% premium. Since then, stock has been consolidating at levels of around 690. Now, Gadgil has a long history of more than 150 years where it started as a small town shop in Sangli, Maharashtra. Today, it is present in 39 cities of Maharashtra and Goa, out of which 28 are company operated and 11 are franchised. It has a market cap of around 9,400 crore. Then fifth stock is Thangamahil Jewellers. It has a strong dominance in Tamil Nadu, which is one of the largest gold consuming state in the country. It has around 60 stores in the state and has a market cap of around 5,550 crore. So these companies that we discussed have a B2C model where they directly deal with end consumers via retail outlet. There's another B2B model where gold companies sell their products to mid-range jewelers and boutique stores who further sell these products through online platforms and retail stores. It includes companies like Sky Gold, that is also a fast-growing company with a market cap of around 5,700 crore. Then there's a micro-cap company, RBZ Jewelers, that command a market cap of around 820 crore. Now let us do a comparative analysis of all top players to figure out the best investment opportunity in the gold retail sector. Alright, let's have a quick comparison of all top listed players in Indian organized gold retail sector. So first of all, if you look at business model, your Titan, Kalyan Jeweller, then Gadgil, Senco, Thangamahil, they have B2C business, which is business to consumer, where they have their own retail store. Companies like Sky Gold and RBZ Jeweller are into B2B business model, where basically companies like Kalyan, Senco are the client of Sky Gold and RBZ Jeweller. Right, so I hope you get it. Next is your market cap. So Titan is a mammoth with a market cap of 3.05 lakh crore. Kalyan is second highest with 80,000 crore market cap. PN Gadgil and Senco are at par with around 9,500 crore market cap. Thangamayil has a market cap of 5,500 crore, Sky Gold is 5,700 and RBZ Jeweler is a micro cap company with a market cap below 1,000 crore. If you look at total stores, again Titan leads it with 1,000 plus stores across 4 brands of Tanishq, Mia, CaratLane and Zoya. Then Kalyan has got 300 plus stores across India and overseas. PN Gadgil has 39 stores, but it is mainly concentrated in Maharashtra and Goa. Senco has got 166 stores. Thangamayil has got 60 stores, but again the concentration is in Tamil Nadu. Next, if you look at the revenue, your Titan revenue for trailing 12 months is 54,500 crore, out of which around 85 to 90% is from jewelry segment. Kalyan is 21,000 crore, PN Gadgil is 6,000, Senco is around 5,600, Thangamayil is 4,200, Sky Gold is 2,400 and RBZ Jeweler is 400 crore. Trailing 12-month profit is for Titan is 3,200 crore, 600 for Kalyan Jeweler, 154 crore for PN Gadgil and then 218 crore for Senco, 95 crore for Thangamayil, Sky Gold is 80 crore and RBZ Jeweler is 27. Next, if you look at the revenue growth in last 5 years, Titan has grown at 21% at a CAGR level for last 5 years, which is a fantastic growth. Kalyan Jeweler growth at revenue for last 5 years is 14%. Then PN Gadgil is 21%, again fantastic. Senco is 16%. Thangamayil is 22%. Sky Gold is 17%. RBZ, we don't have the data because it is recently listed. And then if you look at the profit growth, Titan growth is 20%, again fantastic. Kalyan, we cannot look at the data because they've got depreciation and all of that. So then PN Gadgil is 44% growth, Senco is 20%, Thangamayil is 32%, Sky Gold has been leading with an absolutely fantastic growth of 67%, mainly because there's a strong upcycle in this sector. Then if you look at trailing 12-month revenue growth, which is the last 12-month growth, 17% is for Titan, 33% for Kalyan. So if you look at it, as compared to 5 years, your Kalyan is grown at a much faster rate in trailing 12 months. 38% for PN Gadgil. So PN Gadgil has also grown at a much faster rate as compared to 21%. Now the growth in trailing 12 months is 38%. Then 23% for Senco. So it has been more or less consistent. Thangamayil is 23%. Sky Gold revenue growth in trailing 12 months is 84%. Next, if you look at the trailing 12-month profit growth, Titan is actually degrown by 2%, and that is the reason company's share price has been correcting and consolidating in last 1 year. Kalyan net profit has grown at 21%. PN Gadgil 179% growth. Obviously, it is an exception. Company cannot grow at this rate, but then we have to see what is the sustainable growth rate for the company in the coming years. Senco growth is 28%. Thangamayil has degrown by 15%. Sky Gold is extraordinary growth of 162% and RBZ Jeweler is minus 4% growth in trailing 12-month net profit. Then if you look at the operating profit, again a very important KPI. So Titan has got a very high operating profit of 10%. As compared to that, Kalyan is 6%, PN Gadgil is 4%, Senco is 8%, Thangamayil is 4%. Next very important parameter is the profitability. That's where we have to look at the ROE and ROCE. Titan extraordinary profitability of 32.9%. No wonder this company always command a premium because of the return on equity it generate. Kalyan has got 15.2% ROE, PN Gadgil fantastic ROE of 32.4%, Senco is 16.3%, Thangamayil is 28%, Sky Gold is 23%, RBZ Jeweler is 14.4%. So majority of these companies have got a very good ROE. ROCE, again Titan is leading with 22.7% ROCE, Kalyan is 14%, PN Gadgil fantastic with 30.8%, Senco is 13.8%, Thangamayil is 20.3%, Sky Gold 18.6% and RBZ is 16%. Then if you look at debt to equity, so your Titan has got high debt of 2.22, Kalyan is 1.04, PN Gadgil has got the lowest debt of 0.16, then Senco is 1.31, Thangamayil is 1.55, Sky Gold is 1.35. These are retail companies. They need capital to grow their business and that is the reason they've got higher debt to equity. Now next important KPI is CFO to EBITDA, which is basically the company's ability to convert its EBITDA, which is operating profit, into cash. Here please note that these companies, they do not have a very high CFO to EBITDA. Titan is 29, then PN Gadgil is just 38, Senco is negative, then Sky Gold is negative minus 172%, mainly because these companies are sitting on very high inventory. And inventory here in this case is nothing but gold. So again, gold is an appreciating asset class. In other sector, inventory if they have, that would depreciate. But in this case, inventory, which is gold, isn't appreciating asset class. So here CFO to EBITDA won't make a lot of sense, okay? Then inventory days, if you look at it, which is very important because it shows how fast companies are able to churn the inventory. Titan is 176 days, Kalyan is 191, PN Gadgil again here leading it with just 62 days of inventory. 200 days for Senco, Thangamile is 128, Sky Gold again has got very good inventory days of just 59, RBZ has got very high inventory days of 313. Next two very important parameter in retail sector is your asset turnover and return on asset. So asset turnover is nothing but the ability of the company to convert its asset into sale. So for example, Titan has got an asset turnover of 1.74, which means for every 1 rupee of asset, Titan is able to generate sale of 1.74 rupee, which is a very good number. Kalyan is 1.58. PN Gadgil extraordinary asset turnover, which is 4.81. Right? So for every 1 rupee of asset, it is able to generate sale of 4.8 rupee. Senco is 1.58, Thangamile is 2.8, Sky Gold again fantastic 4.17, RBZ Jeweler is 1.33. Then return on asset is again very important. It's the ability of the company to convert its asset into net profit. So Titan is 11.9%, then Kalyan is 5%, PN Gadgil is 12.3%. Again fantastic, both Titan and PN Gadgil. Senco is 5.7%, Thangamile is 9%, Sky Gold is 9.5%, RBZ Jeweler is 8.79%. Next, I have looked at the promoter holding structure. So Titan promoter holding is 52.9, Kalyan is 62, PN Gadgil 83. So eventually they have to reduce below 75%. Senco is 64, Thangamile is 61, Sky Gold is 58 and RBZ. So promoter in all these companies are holding a very significant stake. Next, FI and DI holding. So want to know if institutions are showing confidence in the company or not. Titan, fantastic confidence, 29.5% by FIs and DI. Kalyan again 29.48%, PN Gadgil 9.6%. Obviously just they don't have a lot of equity, 83% is with promoter. Senco again 22.95% with FIs and DIs, 17% for Thangamile, 7.5% for Sky Gold and 2.74% for RBZ Jeweler. Next, if you look at public holding, ideally I like this ratio to be on the lower side. So here public holding for Titan is 17.3%. Kalyan, again, I have also looked at whether it has increased or decreased. So as compared to last quarter, it has slightly reduced. So last quarter it was 17.94 and now it is 17.3. Next, Kalyan is 7.6. As compared to last quarter, it has actually increased. So last quarter public holding was 6.46. Now it is 7.6. Then if you look at PN Gadgil, it is 7.29. We don't have historical data as it is recently listed. Next, Senco Gold, if you look at, it is 12.94 and it was last quarter 14.36. So public holding has reduced, which is a positive sign for Senco. Next, if you look at Thangamile, it is 21.4% public holding and has increased as compared to last quarter, which was 19.5%. Next, we have got Sky Gold, where public holding is 34% and as compared to last quarter, it is actually reduced. And last quarter, it was 37%. So public holding has reduced and your FISDS holding has increased. And RBZ Jeweler is 22%, which is almost same. Next, final piece is the valuation, where we have looked at PE ratio, EV to EBITDA and price to sale. So PE of Titan is 94.4, which is certainly on the higher side, but please note that you can't just look at PE ratio of these retail companies because they are in growth phase. They are opening a lot of new stores and obviously those new stores would take time to generate profit for the company. Right, and that is the reason PE won't be a right metric, because in case of Kalyan it is showing 128, PN Gadgil is showing 61, Senco is 42. So even if you look at it comparatively, Senco has got the lowest price to earning. Then Thangamile is 58, Sky Gold is 71 and RBZ Jeweler is 32. Again, here you can't compare the valuation of Sky Gold and RBZ with your other companies because the model is completely different. Your B2C companies will always command a premium. You can't just look at 32.6 absolute terms for RBZ and say that it is cheap, right? So you have to look at comparative data. EV to EBITDA is again a very important metric, which is 56.4 for Titan, again command a premium, that too after 1 year of correction and consolidation in share price. 56.8 is for Kalyan, which is again on the higher side. 33.8 for PN Gadgil, which is decent as compared to other companies. 21.8 is for Senco. Thangamile is 33, Sky Gold is 42.7 and 21.4 is for RBZ Jeweler. Another very important parameter is what can be the expectation from these companies in the future. So Titan is expecting to add 170 stores in FY25, right? But again, company has got 1,000 stores, so nearly 70% addition. Then if you look at Kalyan Jeweler, company is adding 80 Kalyan showroom, 50 Candare stores and 6 overseas showroom. And in FY26, company is planned to add another 20% stores as compared to FY25. So obviously company is on much higher growth trajectory, and probably that is the reason market is giving it a very high premium. Having said this, I think valuations are stretched in case of Kalyan. And then if you look at PN Gadgil, company has got a guidance of 8,000 crore revenue for FY25 versus your 6,000 crore revenue in trailing 12 months. Obviously, it is a very high growth guidance from PN Gadgil. FY26 company is guided for 9,500 crore revenue, and even margins are expected to improve. So PN Gadgil, I think, is given very good guidance. The ratios are also good, and as compared to that, it will command a premium over companies like Senco. So in case of Senco, company is guided for launch of 18 to 20 showroom in H2 of FY25. That include 10 to 12 franchisee, and 18 to 20% revenue growth guidance is given by company. So obviously, as compared to companies like PN Gadgil, the growth is slightly on the lower side, but then that is the reason market is not giving it as much premium as compared to companies like PN Gadgil. But I think this is more sustainable, 18 to 20% growth for the next few years. Rather, I'm not sure whether these companies like PN Gadgil can grow at 40-50% on sustainable basis. Then Thangamile has given 27% revenue growth guidance. Then if you look at Sky Gold, company is given massive growth guidance of 3,300 crore for FY25. And that includes 2,700 crore from core operation and 600 crore revenue from acquisition. It is against 1,745 crore of revenue in FY24. So nearly 2x revenue growth guidance for FY25, and that is the reason company's share price is also growing. And if you look at the revenue growth in the past is also fantastic. And RBZ Jeweler is guided for 2x growth in volume by FY26 as compared to FY24. So again, RBZ is also growing at a fast rate. So all in all, if you look at it, for the near term, if you want to invest in a satellite portfolio, to cater to the growth, I think these B2B segment of Sky Gold and RBZ are looking good. And I think in the near term, they can continue to generate good profit because they've guided for fantastic growth, and market is also expecting them to do well. But if you want to consider a stock for long term, obviously I would suggest going for your B2C segment, where the company owns the retail store, where you've got companies like your Titan, Kalyan. Obviously, Titan is a mega cap company. Kalyan is also looking quite huge now with 80,000 crore, and that's where you've got PN Gadgil and Senco, where both are looking good. Again, PN Gadgil has got better ratios, but valuations are 61. Senco valuations are at 42.7 PE. Also, price to sale is more or less same, but EV to EBITDA of Senco is lower side. But then the return ratio of Senco are slightly lower as compared to PN Gadgil. Thangamile is also decent, but I'm not really sure because they've shown minus 15% profit growth in trailing 12 months. So this is the comparison of these top players in the organized gold retail sector across these 24-25 parameters. So in this video, we discussed the fast-growing organized retail jewelry sector of India and key drivers behind the growth. Then we covered top players in the sector that include Titan, Kalyan Jeweler, Senco Gold, PN Gadgil, Thangamile Jewelers that are in B2C segment, and two B2B players, Sky Gold and RBZ Jewelers. We also looked at peer comparison and identified which company is leading the growth and also available at decent valuation. Now tell me in the comments, which is your preferred stock from this organized gold retail sector of India. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.